Welcome to Mex Moves, our weekly podcast on Mexico business and finance for a global audience. Eduardo, how are you today?
Doing well, Damien. How are you?
Great. Eduardo, this week we have this great interview with Neri Tollardo. Neri is the founder and CEO of Plata, the fast-growing Mexico fintech. Plata has grown from basically nothing to over 2 million customers in just a bit more than a couple of years. It's now valued over $3 billion, and it's got a full bank license, which it plans to make operational first quarter of next year. And Neri's going to explain how it achieved all that. It's quite an astonishing achievement. And then, Eduardo, I think you're going to talk about the World Cup and Mexico City as a potential home to some U.S. sports teams and football and baseball and so on. And we'll discuss the upcoming announced IPO of Esentia, the energy infrastructure company. And also, there are implications in Mexico for the announcement in the U.S. of Kimberly-Clark buying Kenvue, which I guess is best known for being the Tylenol maker. Kimberly-Clark is a very powerful local business, separately owned in part. And so we'll talk a little bit about what's going to happen to Kimberly, Mexico, once the Kenvue transaction goes through in the US. So Eduardo, why don't we kick off with you and the World Cup and Mexico City maybe being a home to US sports teams?
Yeah, well, Damien, this week the Mexican president, Claudia Sheinbaum, welcomed the FIFA Mexico representative at Los Pinos, the former home and office of the president, now a cultural convention center in downtown Mexico, near downtown Mexico, to highlight the importance of the World Cup for the country, where 800,000 people will watch matches and they will be broadcast and seen by 6 billion viewers worldwide. So it's a great opportunity to showcase the country. The government is already investing in roads, airports. I don't know if you've been to the Mexico City airport. It's a bit of a mess right now because they're renovating the terminals at the Benito Juarez airport. But at the same time, I don't know if you saw this Substack written by Nate Silver, the pollster, who investigated in a quantitative form the biggest and largest North American cities, and by North American, he also included Mexican cities, that have no major leagues or no major sports teams from the United States. And to his surprise, the largest city in the region that hasn't had or does not have any American football, hockey, or basketball team is Mexico City. And it's one of the largest cities in North America by population, by the size of its economy, by many quantitative factors. So his argument was that if there were to be any expansion by any of the major league teams in America, they should consider Mexico City as the first candidate for all these quantitative elements that the city encompasses and has that could make it a very interesting, profitable, surging enterprise. He claims, with reason obviously, from a quantitative basis, that it's shorter to fly from Mexico City to many cities in the U.S. than from cities in the East Coast to the West Coast of that country. So for him, it's a no-brainer in a quantitative basis that Mexico City should get a big team like a football, baseball, basketball, or hockey team. Now, this is something that is not new, that it's been talked about for at least 2 decades, and it hasn't materialized. So I guess there are elements that Nate did not look at, because it's not only numbers that matter, it's many other elements that are maybe not quantitatively right there that have prevented any businessman or group of businessmen to seek to come into Mexico and have a team here in the country. So it's an interesting story. It was an interesting Substack, mainly because he used his analytic powers to come to this conclusion. Yet I don't think it will bear fruit in the short term, or it will take a little bit longer for us to enjoy a Major League Baseball game here in Mexico City, or a football game here in Mexico City, or a basketball game. I don't know if hockey would have that much of a following, as we are not a very cold weather country to start with. What do you make of it?
Well, I more have a question, Eduardo. You as a Mexican who likes American sports and lives some of your life in the United States, American wife, do you want to watch, or do Mexicans that you know actually want to watch a Mexican team, or really is the point of football and baseball is actually watching an American team? I mean, let me give you an analogy. Mexicans drink lots of whiskey, but if you start to make the whiskey in Mexico instead of importing it from Scotland, they may not like it that much. I mean, is Nate Silver kind of missing the point, which is the whole attraction of watching NFL is to see a bunch of Americans play it?
That's a very good question, but I mean, the tryouts that both the basketball and the baseball and as a matter of fact, the NFL has also done in Mexico has generated tremendous number of people. Now, obviously, it's like coming for or going to a concert that it's once in a while is not something that is repetitive. But I went to see an American football game at the Estadio Azteca many years ago, and it was packed. And it was a great experience, and it was fun. It was a blowout by the New England Patriots, by the way. It wasn't that much fun of a game because the other team didn't match up. But I went to see the San Diego Padres against the Giants, if I recall correctly, not so long ago. And again, it was packed. Whether that would translate in a natural following of local fans, it's something to be seen. But I think in the end, it would be something that would generate that traction with the Mexican population. I'm just thinking out loud here, Damien. If it's like Disney would open up a park here in Mexico, I think you would have hundreds of Mexicans visiting that park, despite the fact that it's a great, almost like a family tradition when you have the resources to take your family to either Orlando or LA as a passage, almost as a rite of passage sometimes. But I think it nevertheless would generate following in the country. And Mexico probably is the country with the largest fan base in American football, because of the proximity probably, and also a huge baseball fan base here, with the Yankees and many other teams having tremendous followers. So I don't think the Dodgers will play here or the Yankees will play here, but the Mexican Diablos, if they were in the major leagues, they would have a huge followers.
Yeah, and the Diablos is in the stock market, as we've talked about before. And I don't think any U.S. Baseball team is listed in the stock market. I think they tend to be privately owned. But Chivas USA was a bit of a flop, right? I mean, it was sort of somewhat the same logic, but just applied to soccer in the U.S., right? Bring a Mexico team to L.A. and it will be packed. But it didn't. As I recall, it didn't really
work.
It didn't work. I mean, sometimes these things look good on paper, but when you try to translate them to reality, it plays against people's kind of pre-existing loyalties or understanding of how these teams should function.
Yeah, let me tell you a little anecdote. I did a reporting story with the help of a colleague in Sonora. There is already a reverse example of that going on, in the sense that there is a Mexican team that moved out of Mexico for the Liga Mexicana del Pacífico, the Mexican Pacific League in the winter, a big baseball tournament, and they moved the team from Navajoa to Tucson, Arizona. So there will be a Mexican team playing in the U.S. for a Mexican tournament. It's been a bigger of a kerfuffle because the team does not have the visas for the players, so they haven't been able to open up their games in Tucson, Arizona yet. But with the shutdown being over, maybe this will speed up and they will be able to play in their Tucson home team pretty soon. And we will see how that works out. I mean, how much do Americans want to see Mexican baseball in their territory the other way around?
Another anecdote, there's a football team in Guadalajara that you're obviously familiar with the Atlas football club, which I think a few years back, and rather surprisingly, kind of won the Liga MX. And their stripe is red and black. It's exactly the same colors as a school I went to in England, a school called Aberforth. Anyway, I looked it up, and it turns out that the Atlas was founded by three Mexico alumni of Aberforth who went from Guadalajara to this Catholic school in England, learned how to play soccer, brought it to Guadalajara, and used the same colors as the school that I went to many decades ago. So, in as you probably know, the nickname is the Rojinegros of the team, which is in English, but the name of the school I went to. So there's actually a very long tradition going back, probably way before this particular example, of sports teams kind of migrating from one country to another. Who would have thought that a fairly obscure English school in Yorkshire would sort of, in a way, helped found a thriving football team in Guadalajara on the west side of Mexico.
One of the oldest. I had no idea about that story, Damien. That's a great anecdote. I didn't realize the connection. I knew that Pachuca might have some English tradition because the British mines in the Hidalgo state, but I hadn't heard about this from the Atlas football team. So, and then we've talked about all the money that is coming from abroad to the Mexican football league. So yeah, there is a transcultural transpollination of funds and interest that are going on. I wonder whether this will eventually materialize in a team, baseball, football, basketball, playing from a U.S. league in Mexico, which would make it really a North American league, because there are some Canadian teams in baseball playing in American. I think in hockey, obviously, I don't know if in basketball there is a Canadian basketball basketball team playing in the U.S.
Yeah, I just looked it up, and they're the brothers were the Orendane brothers. That's how you pronounce it.
There is a tequila called Orendine as well.
Orendine, I should have said. Well, probably the same ones. And they went to Aberforth in 1908, so more than 115, 17 years ago. So there you are. Should we move on? Another IPO after the Aeromexico IPO last week. Well, this one hasn't priced yet, and we have to see whether, like any IPO, whether it does price. But Esentia Energy Development, which is basically the natural gas infrastructure and natural gas marketing and buying of what used to be called Famaca, has launched its IPO. It's $610 million if it goes through. There's going to be shares placed both in Mexico and the United States. It's not going to be fully, as I understand it, it's not going to be fully listed in the United States in the way that Aeromexico was. And so it's a pretty interesting company. I was reading the prospectus quickly this morning. It's got 2,000 kilometers of pipelines. It's got 5 compression stations and, as I mentioned, a marketing arm called Esentia Gas. And it moves about 15% of Mexico's daily natural gas demand. It's making EBITDA of a bit over $300 million. And the main shareholder now is this big Swiss private equity or Swiss-based private equity group called Partners Group. But you also have a Middle Eastern sovereign wealth fund, Mubadala, and then the original Famaca shareholders who are still involved in other businesses of Famaca, Fernando and run those other businesses, and Manuel Calvillo. And basically, so Famaca, as I understand it, was founded about 65 years ago as a sort of classic infrastructure firm with roads, drainage, civil works. It helped lay fiber infrastructure for Telmex. It went through a really tough patch in the 1994 peso devaluation, the tequila crisis, because it had a lot of debt in dollars, and most of its revenues in pesos. And then back in 1998, I think it acquired a 160-kilometer pipeline from Shell, which Shell was unable to complete for whatever reason. And Famaca, thanks to its kind of experience in getting rights of way, permitting, navigating Mexico's regulatory jungle, was able to finish it. And then they basically were able to leverage off that pipeline and grow from El Paso to Aguascalientes, and then it sort of splits in Aguascalientes to Guadalajara on the one hand, and Villa de Reyes in San Luis Potosí. And it's really got the, on the west side of Mexico, it's got the almost all the natural gas infrastructure, and the gas that's connected to Oaxaca, Texas is the lowest cost gas, because there's lots of excess gas in Oaxaca thanks to the shale boom, the shale gas kind of boom. And so the Oaxaca hub the gas price is much lower than other hub prices. So it's sort of, there's been a lot of discussion in the papers, which you've probably seen, Eduardo, about whether Mexico is kind of dangerously dependent on the US for its gas and therefore for its electricity, because the vast majority of Mexico's electricity now runs off gas, and almost all the gas comes from the US. So Trump, if he wanted to, could, cut off basically, Mexico's electricity by cutting off the gas. Is sort of this nightmare scenario. I actually think it's, there's risks wherever you go in life, obviously, but I think it's one of the lowest risks that Mexico faces, because there's really a codependency between Mexico and the US, because the US needs to get rid of this gas to sell this gas, because otherwise it's going to have to burn it off, which would be expensive, and then they would lose the revenues from selling it to Mexico. And Mexico obviously needs the gas because it's much lower cost than other forms of fuel, like fuel oil. And not only that, but it's environmentally much less damaging. The emissions related to natural gas for electricity production are much lower than with fuel oil that Mexico still uses in some plants. And so both sides win from this, and it would really make no sense for either side to try to undermine it. If Mexico suddenly said, we want to be, as AMLO did with gasoline, with petrol, we want to be self-sufficient, probably electricity prices would go up fivefold, which would create a massive political problem. But if the US tried to block the exports, then the energy companies, especially the ones in Texas, would be severely hurt. And Trump has so many other levers to hit Mexico, just tariffs, most obviously, which don't really affect too badly the United States. That this would be his. He doesn't really need to do it. This would be his last resort, I think. And in fact, I've been going through Trump's speeches. He's never made any reference to this as a possibility. And Texas, obviously, a big Republican state, so I don't think it's a risk from a practical point of view. And on the contrary, I think they're kind of quite complementary. And I think the codependency is probably going to probably continue, and that's presumably what Esentia is betting on. And if the IPO goes through, the investors in the deal are betting on that this isn't going to be an issue. And on the contrary, and bringing natural gas, because with the money, most of the offering is primary, i.e., they're raising more money for the company. By expanding the natural gas infrastructure, you're going to be bringing natural gas to more electricity plants, which Mexico needs because of nearshoring, because of data centers, and so on. Is going to be fundamental to making and keeping Mexico competitive. So hopefully it goes through. Did you have a chance to look at it, Eduardo?
I did, Damien. I love one element of the company. I guess the name of their pipeline distribution is called Guadalajara system. Comes from Oaxaca, Texas, and then they added the Jara from Guadalajara. It's a very important company in the transportation of gas in Mexico, without a doubt. I hope it goes through as well. I would just add to what the overview you gave us is that the shareholders, Partners Group and the Sovereign Fund will also sell some shares as part of the IPO. They will unload some of their current stake in the company. And I don't know if I'm right that it could be as large between the private equity, the natural sale of shares plus the unloading of, it could be as large as $1 billion. Am I right, or am I not calculating it properly? I saw the numbers of shares. I made a multiplication with a middle price of 61 pesos, and that's how I came up. But I might be exaggerating the number. But it's not a small transaction, regardless.
Yeah, the Bloomberg ran with 600, but that's, I think, at the middle of the range and without the green shoe. So maybe I get up to 700 or so, and maybe if it gets to the top of the range, you're starting getting to that number you mentioned. Now, the Calvillos were at the original founder of the family, behind Fermaca. They were at the Mañanera a couple of months back. And they have, because they're now minority shareholders in Esentia, they have other businesses which are very large, or potentially very large at least, and they announced absolutely, for me at least, gobsmacking announcement, even by sort of Mañanera exaggeration levels. They said they were going to invest $3.7 billion in two quite ambitious projects, $1 billion in a fertilizer plant in Lerdo, Durango, and $2.7 billion in a kind of sci-fi digital city in Durango, which was going to be, is going to be apparently data centers, gas pipelines, fiber optic network, combined cycle power, and so on. So now there is some logic to this. Obviously, the $1 billion on the fertilizer side is going to be an urea plant. Most of the costs of a urea plant of this nature are on natural gas, of course, but maybe 75% or so. So if Fermaca through Esentia can bring low cost West Texas gas, then that will make the urea very cost competitive, and Mexico is a big importer. Its food agriculture sector is a big importer of fertilizer from Asia, even Russia and the Middle East. So this would be a good thing. And then the maybe even more ambitious plan of the sort of digital city. It's going to be they're going to have a fiber optic network from El Paso to Querétaro. Obviously, a data center. These days, everyone wants to do a data center, and then a lot of power to support the data center and the digital fiber optic network. Now, there was a Bloomberg story that cast some doubt on all of this actually happening. Mentioning that it was 3.7 billion, but it only had about 100 million in equity. The story is a few months ago, so things may have changed. I don't know, but at that time they said Bloomberg only 100 million in equity and only 200 million in debt. So they still got a huge amount of financing to achieve. And then they sort of talked in Bloomberg were able to interview the CEO of this. They talked about. They sort of threw out a lot of names: Meta, Amazon, Google, sort of Oracle, you name it, as possible clients. But these were sort of potential customers, and I think you and I could, also our potential customers could include maybe all of those companies and many more. But one thing is having potential customers and actually having them signed on. Again, it would be brilliant for Mexico if this were to happen, but we need, like a lot of these Mañanera announcements, perhaps to be a little bit cautious or a little bit skeptical that all of it will occur. And they're still at that time at least were working on an agreement with the Durango government to get enough water supply, because in this case at least the data centers need some water for cooling. And and Durango, I haven't been in Durango for a very long time, but Durango, historically at least, is not a very developed state in Mexico. It doesn't have a lot of experience in building these kind of high tech businesses, and presumably there aren't a lot of people in Durango who are able to do it. So they'd have to ship in a lot of people as well as get all the infrastructure and financing in place. So let's see. It certainly raised a few eyebrows when they announced it in the Mañanera.
Yeah, no one was able to find out how much the Calvillo Alvarez obtained from selling their controlling stake in Fermaca to the Partners Group and the Sovereign Fund. Did we? That transaction was never. It was a private transaction, so the numbers of that were never revealed. They are well known, the brothers, and they're successful businessmen. But yes, you're completely right to cast some doubt, especially with $100 million of equity only and to a 3-point-something billion projects. That sounds a bit too risque even for banks that will be willing to take on high risk. But who knows? The Mañaneras, as you pointed out correctly, and as we have said, are showcasing sometimes things that in the end are either old, not as large, or will have to materialize later on in time. So, yeah. But the Esentia Energy IPO, I hope it comes through. It's a great news again for the Mexican stock market. Now that we've had the Aeromexico return, this IPO, and if we want to take Fibra next as another one that listed a few weeks back. It seems to be coming alive after a long, prolonged death. If you ask me, since I think 2018, we hadn't seen any IPOs.
That's right. And talking about Fibra Next, the IPO was basically a non-cash IPO, right?
Correct.
But now they've announced in a press release at the end of last week that they're going to do a follow-on offering, which will basically turn Fibra Next, which is the industrial assets of the Ellman family, plus the industrial assets of Fibra Uno that have been bought by Fibra Next for shares in Fibra Next. They've announced a follow-on offering, which will make it a real company that will start to trade properly and so on. According to the press release, which I'm looking at now, it's a $550 million offering, so it's quite a substantial stake. They'll use the money to acquire more industrial assets, land, capex. It has a very large land bank already. So with that land bank and with the money from this follow-on offering, they can build more industrial real estate assets, industrial parks, and so on. So it hasn't, as far as it hasn't priced yet, but if and when it prices, then you'll see another big. Fibra Uno was already very big, but now it will be even bigger in the industrial space and separate from Fibra Uno, and they have a first right of refusal on Funo's assets in the industrial side. So it will start to compete with even more than it does today with Prologues, with Fibra Monterrey, Fibra Macquarie. So you're going to see another big space. And I think there are a lot of fears about nearshoring under Trump, especially when Trump took over. We don't know what's going to happen with USMCA. Mexico's paying tariffs that it wasn't paying, especially on cars and steel and some copper products. But people are willing to kind of look through the headlines and say that one way or another, Mexico's going to still be a key industrial partner of the U.S., probably as part of a continued USMCA, and therefore it's a good time to buy these assets that have been hit quite hard by Trump's election. So you've seen decent positive share price moves from the industrial REITs, or Fibras as they're called here, and this IPO would just sort of highlight and underline all of that. Not IPO, yeah. This follow-on offering from an IPO that was largely non-cash, and therefore in some respects you could consider it as the sort of real IPO of Fibra Next.
Yeah, like you said last week, Damien, I think the sector that in Mexico is growing at a real pace is the export sector, and even though investment in Mexico is dropping, if that export sector continues growing like it is expected, despite Trump or despite the tariffs, like you said, there will need to be some investment in more industrial parks, expand production capacity, and that's where Fibra Next and some of the other industrial REITs in Mexico are banking or hoping to bank on in the future. So I think the follow-on of Fibra Next is another symbol that prospect is well on its way to materialize.
Moving on, agree with all of that. Moving on, there was a big transaction announced, which you obviously saw a few weeks ago in the US, which was Kimberly-Clark, the US company, buying Kenvue for $50 billion. So it's obviously a huge transaction. And Kenvue is best known, I think, as the owner of Tylenol, and which itself had kind of come under the spotlight when I think Robert Kennedy, the Secretary of Health in the United States, sort of linked it to autism with children whose pregnant mothers had taken while they were gestating. So why is this important? The market hated the transaction from a perspective of Kimberly. It was down. The Kimberly stock dropped 15% when the deal was announced, and I think that this is relevant for Mexico, Eduardo, because Kimberly has an unusual relationship with Kimberly Mexico. Kimberly US owns about 48%, only about 48% of Kimberly Mexico. The remaining 52% is divided between the X Gonzalez family, Claudio X Gonzalez, maybe one of Mexico's most prominent and kind of well-known businessman. At one point, Claudio Eckes, I think, was on the board of about 50% of listed companies in Mexico. Might be exaggerating a tiny bit, but he was everywhere and still is very active. And the stock market, so which the Kimberly Mexico is floated. So the question is, what will Kimberly do once this transaction closes with their Mexico operations? Will they sell and Kenvue Mexico to Kimberly? So they just have one company in Mexico that owns all of Kimberly's assets. Or will they keep it themselves and in which case maybe reach a kind of licensing agreement with Kimberly Mexico that would then distribute the products? Despite Kenvue being best known, at least by me, for Tylenol, in fact, it's not its, as I understand it, it's not its biggest product in Mexico. Or there's a Lubadrem, which is about maybe $130 million of sales, so it's a bigger product. Listerine, $80 million, which is also bigger. Johnson's baby oil, I guess. And whereas the consumer health, which Tylenol is obviously the biggest part, is only about 15% of sales or so. That's Tylenol, Motrin, Tylex. So the big business is actually not, as I understand it, is not Tylenol per se, but it's quite big. I mean, in Mexico, Euromonitor says that Kenvue Mexico had sales of about $330 million. So it's about 10% of the size of Kimberly-Clark Mexico, and it probably has some, pretty high margins, maybe 20% margins. So that'd be $60 million of EBITDA. So if they were Kimberly Mexico to buy it, it would probably be a $700-800 million price tag. And from my perspective as a former equity analyst, that would be the logical thing to happen, because probably after this transaction, Kimberly US would like the money, and then it avoids any kind of misalignment of interest when you have business with Kimberly Mexico and then business without Kimberly Mexico. And Kimberly Mexico has also been growing outside Kimberly US's kind of core products, which it licenses. So it has it got into a JV with selling pet food, which Nutec, I think it's called. And so apart from the sort of key products of Kimberly-Clark, it's been talking for a long time now about growing outside those areas because the market share is already quite large. Kimberly, it's very dominant in diapers and Pem Care and products of that nature. Are you a Kimberly-Clark brand?
Everybody is. Everybody buys something out of Kimberly in Mexico, without a doubt. And now more, I mean, what you were just telling us about all these brands that Kenvue has and that might be absorbed by the Mexican company. The Kimberly-Clark Mexico has the resources to absorb that transaction, no, Damien? And at a price, at the correct price, the market will probably support it. Or what's your take on the Mexican side of the equation?
Yeah, I mean, Kimberly has very little debt. I think its debt to EBITDA is 1 time. It's super under-leveraged. It's a massive, because it has these 25% operating margins. So in Mexico, and not much CapEx, its plants are already in place. So it's a big cash generator, and it's been it's always historically been, of the big companies in Mexico, by far and away, the one that pays the highest share of earnings in dividends. Its dividend yield has always been, 5, at some moments in history, 10%. And it does a lot of cash buybacks. This year, I think they're going to buy back, 1.5 billion pesos of stock. So it's a huge cash generator. The issue always on Kimberly, I guess there've been 2 issues in Mexico. One is the kind of lack of growth, because they already dominate all their key markets, and so they can only really grow with population. And then the other issue is kind of how sustainable are these very high margins if competition begins to bite. Kimberly doesn't provide any product to private label right now in Mexico, because obviously the margins for private label are much lower. But on the face of it, they are vulnerable to this boom in private label that we're seeing in Mexico and everywhere in the world. So if you look at the second quarter numbers and the third quarter numbers, which have already become public, you're seeing much faster growth in the hard discounters, like tiendas 3B in the second quarter. Sales are up 37% or so. Its same store sales were up like 18. Whereas if you look at Walmart or Chedraui or Soriana, you were looking at like low single digit same store sales growth and total sales growth mid single digit. So there's a huge gap. Now, what explains that, in part, because obviously there's lots of moving parts and issues here, is partly the popularity of private label. So 3B has about 55% of its total SKUs, total products are private label, and you can sell those at a much lower cost. So I think people will wonder if eventually, fem care and diapers will get attacked by the private labels, and if they do, there could be a cost savings. But the technology is not straightforward, and people are very brand conscious when it comes to these type of very, very personal products. So I think private label's obviously doing well in many areas, but maybe it's going to take a bit of a time before it gets to sort of Kimberly's core businesses.
Yeah, Kimberly spends a lot of money in advertising, or at least that's my impression because of all the ads I see from its products. But if any company could take on the brands that the Tylenol maker produces, could be and knows the market well, is Kimberly, without a doubt. No, I mean there are other consumer products companies in Mexico that are large, but Kimberly is outstanding. So, I mean, your value proposition makes sense, and I think the company will benefit from expanding in that area as it's already dominant in this market. So we'll have to wait and see a little bit longer.
Yeah, but I think it will. I mean, I don't have any information, but I think they will end up buying it, and then
Makes
folding
sense.
it into Kimberly. I think it makes sense. And from Kimberly US point of view, having Kimberly Mexico, even though they only own 48% of it, has been like hugely positive, because their market shares in Mexico and their cash flow in Mexico is, I don't know every country that they're in, but my guess is that they're in Mexico is one of their best, if not their best performing market. It's been supremely well managed, first by Claudio Eckes and then by his son, I think, who's now the CEO, Pablo
That's
Eckes.
correct.
Brilliant. Just to finish, Eduardo, I saw another Bloomberg story. I seem to be quoting Bloomberg a lot today. Your old shop, about Mexico once again delaying the tariffs, the 10 to 50% tariffs that they were going to put or are going to put on Chinese goods. And there's kind of a lot of surprising amount of opposition to it. What do you make of it? Did you get a chance to see the story?
I saw it as well, and I saw that BYD was also part of the pushback. I mean, to me, Damien, I wrote something about it when the Mexican government decided to impose these tariffs, and I didn't like it the way they did it. I thought that it was moving back the dial from the liberalization that Mexico had spearheaded, and I'm not surprised that there is pushback. I think Mexico should be careful on how it does its tariff proposals. I know that there are some Chinese products that are subsidized or that are being dumped in the Mexican economy. They should punish those ones, but not just do a broad stroke type Trump type of imposing tariffs on everything. I think there are a lot of components, there are a lot of inputs that are needed from China to keep the Mexican supply chains rolling and moving. So you ought to be careful. And I think the government wasn't careful in the way they did it. They were trying to please probably Trump more than anyone else. And now that the measures has been analyzed probably, or that the ones that were going to suffer the most are coming back and pushing back, and they should. I think you should be all in favor of free trade. Fair trade is also very important, but not just blanketed tariffs for a country just for the sake of it. Despite all my big worries and deep concerns about how Chinese companies operate and produce and do things, I would rather be taking a cautious approach and investigate them well, and then raise the tariffs to them if they were not following fair trade practices.
I mean, that's right. I mean, I think it's more complex than they thought. First of all, Trump himself has backed down on Chinese tariffs.
Without a doubt.
So between the first announcement and today, so it's like Mexico doesn't need to be more papist than the Pope, as they say here. Second of all, you've got companies that want these tariffs because they compete with Chinese goods, but then you have a lot of companies that have import Chinese imports to then export or then to sell it to local markets. They don't want these tariffs. It's going to put up their costs. And then you have the consumers that love Chinese goods in Mexico, hence the huge success of Shein and Temu and other companies like that, and BYD because they're low cost, and in some cases like BYD, the value is pretty good. So apparently according to the Bloomberg story, there are differences between the finance ministry, which has its set of goals, wants tariff revenues to meet their budget revenues, and the economy ministry, which is worried about USMCA on the one hand, but also worried about the competitiveness of Mexican companies. So there's a lot of moving parts. I think the government probably was, as you said, a bit hasty in sort of announcing this without having kind of worked out all the details.
Yeah, let's see what happens. I mean, there should be some tariffs if companies are doing something bad, but not just for the sake of it. That's my humble opinion.
Right. Well, that's not Trump's view, and it's not exactly the Plan Mexico view, although Plan Mexico sort of means slightly different things to different people, right, depending on what their self-interest is. So probably we can wrap it up and move to Neri from Plata.
Let's do that.
Joining me today is Neri Tollardo. Neri is co-founder and CEO of Plata Card, one of Mexico's most successful new fintechs that recently was valued at $3.1 billion in a new $250 million equity deal. Before launching Plata, Neri was top executive at Tinkoff Bank in Russia, and before that, he was a bank analyst at Morgan Stanley. Neri is now bringing that digital banking expertise to Mexico, where Plata Card has grown past 2 million clients, offering mostly credit cards, but it's recently obtained a banking license and plans to expand its offering to be a full-service bank here in Mexico, and it's also begun building a presence in Colombia. Neri, how are you today?
Excellent, Damien. Glad to be on this podcast.
Why don't we start at the beginning? I mean, I've read the newspaper stories and heard, in fact, from you about how sort of Plata in Mexico was sparked indirectly, of course, by the Russian invasion of Ukraine. A group of leaders of Tinkoff left Russia in opposition to the invasion and decided where to put their next project enterprise and settled on Mexico and raised money, and that's how Plata was born. Now, can you just kind of give me the actual story rather than the story that I just told you?
Yeah, absolutely. And I think for the most part, you're right. So I was head of strategy for Tinkoff Bank, which was still is an extremely successful digital bank, arguably the OG of digital banking, and one that served as an example for many, many fintechs around the world. And we were looking at international expansion, which very clearly became impossible after the start of the war between Russia and Ukraine. And as myself and many other people in Russia and at Tinkoff at the time started thinking about what to do with our lives, we had been studying a lot of different countries where we could bring that Tinkoff experience, expertise, business model, and Mexico kind of topped the charts of the place that was most suitable for the kind of business that we wanted to build, which, if we have to describe it in a few sentences, it's a credit-led digital bank. Credit-led because that's the experience that the team has. It's a huge opportunity in Mexico. It's one where you can build a very profitable and sustainable business. Digital because we know how to build next generation financial products, next generation financial infrastructure. And one of the things that really differentiates us is the fact that we built almost everything in-house, ranging from our own core banking all the way to our own chat in the app. And bank because we wanted to be regulated from day one. We understand that offering the full product suite is absolutely crucial to build loyalty, to build stickiness with customers. And the only way to do that in a place like Mexico is to go for a license. And so we've been executing across all those three verticals. The credit business is now very sizable and growing very quickly. The infrastructure is top notch. And we received, as you mentioned, our banking license in December last year. We've been in the process of start of operations pretty much the entire year, and we've had the CNBV in our offices for the last few weeks auditing us to make sure that we're ready, and we feel ready. And I think hopefully we will hear some positive news on that front in the next few months. And every day that we're here in Mexico, we are more and more convinced that we came to the right place and that we identified the right opportunities.
So what part of the playbook did you bring from Russia, from Tinkoff, and what part did you have to change to reflect the differences between Mexico and Russia?
So what we've learned, I would probably just simplify it to two things. The first thing is that competing on product and service is always a good idea. Irrespective of where you are in the world, people want something that works well, that is smooth, that looks good, feels good, kind of rewards people. And that's, what we are obsessed about at Plata. We want to build product that stands out, that gives lots of benefits, features, characteristics, because ultimately that's a much more defendable, in our view, competitive position than competing on price or trying to give the cheapest credit or the highest paying deposit. We want to be associated with quality. And what we've noticed is that, again, whether you're in Russia or you're in Mexico or any other country that we've looked at, people like good stuff. That's the first thing. The second thing, which is more about the business model and how you apply your knowledge about credit and the decisions you take on the economics, is that you cannot assume the same results, but you can use the same frameworks and the same approaches. So you can't assume that a Mexican customer will have the same repayment discipline or repayment schedule as a Russian or a Brazilian customer, but you can assume that using an NPV approach where you measure the profitability of the customer, you measure to a very painstaking level of detail all the different parts of the unit economics, is something that will work. The results will differ, but the approach is the same. And that's what's worked really, really well for us, because after 10, 15 years of experience at Tinkoff, we have tested thousands and thousands of things across many, many products, and we have frameworks that are pretty well tested. And we came here very humbly and ready to be proven wrong and ready for the data to guide us. But the approaches have been very similar, and they've worked pretty well.
Understood. You recently placed a bond, an unsecured bond. I think it was $120 million in the Norwegian market, and there obviously was a prospectus related to that bond. Based on those numbers that you shared with the bondholders and that you're able to share with us, can you go through just some basic kind of numbers of where you are right now in terms of number of clients in Mexico, number of cards issued, revenues, NPL or cost of risk, or anything that you feel comfortable sharing? Because unlike New or Story or Klar, you're not a regulated SOFIPO, so the numbers aren't available, as far as I'm aware, at least in Mexico. So it'd be good to hear from you where exactly Plata is.
Yeah, you're right. And, we're going to try and enjoy this period of less disclosure, which will probably not last very long again, because we hope to be launching as a bank. And then, our disclosure requirements will be even more stringent than probably some of the peers that you've mentioned, because obviously banks are held to the highest of standards. But you're right, we did issue a bond in the Norwegian market, which for a Mexican financial entity is a bit of an exotic operation, but it was received very, very well. And we saw demand from a lot of US and European and Nordic investors. And look, the business has grown to be very meaningful. And right now we have over 2 million active credit card customers. And I genuinely mean active, means people that are actually using the card, that have not defaulted, that are, bringing in revenues to the company. And that is growing very quickly. We've been able to grow at a kind of 10, 15% per month, every month this year. We have a portfolio, a loan portfolio of over $550 million US. And that is obviously growing very quickly in line with the customer growth, but also the existing customers are using their card more and more. We are able to grow the limits to the good customers. So you get a double kick on the revenue front. And we're making almost $40 million of monthly revenue right now. 40. So we're annualizing at almost 450, but that pace is growing very, very quickly. And all of these, growth metrics, and also very importantly, that's coming with very good unit economics and soon with bottom line profitability. Those were really the numbers that led to our most recent Series B round, where we reached a $3 billion valuation.
Impressive, and congratulations for that raise. So I think you raised 160 in your Series A and 250 in your Series B. So that gives you 410 of equity in the A and the B, plus equity you raised before the Series A. How much total equity have you raised?
So I would need to specify that the Series B that we have announced, the 250, that it was partly a secondary and partly a primary, about in kind of 50-50 proportion. So it wasn't a fully fresh capital injection into the company. But right now we have raised around $600 million of equity into the business. Not all of that has come to Mexico, although most of it has. But we did receive a license in Colombia a couple of months ago, so some of those funds will also help us kickstart the development of the project in Colombia. But it's obviously a very significant amount of equity, which is needed for a capital-intensive business like ours, and especially one that's going to be regulated and subject to all the capital requirements that you would expect a bank to be following.
Understood. I think the Series A and the B were both led by Gorra and more strategic ventures, with Televisión Univision presumably participating with Media for Equity. As far as I know, and I'm not an expert on this, but Gorra and more strategic haven't been very active in the sort of LATAM fintech space. How did they become such key investors in Plata? Because we don't generally see them as active as some other VC funds.
So you're right in that Gorra led both rounds. More strategic ventures also participated in both rounds, but there were several other investors that participated in both, and we did get a few new investors as well in the Series B. Admittedly, Gorra was a large investor in Tinkoff. They've known us for a very long time, so when they saw that there was a team kind of taking off and trying to replicate the success of Tinkoff, they recognized the potential very quickly. I think in general, in my conversations with investors, there's a huge appetite to invest in Mexico. It's a market that has, for a number of reasons, lagged Brazil and has not reached the same potential as Brazil has. And so everyone is always looking for very interesting opportunities in Mexico, but not always finding them. And I think, these investors, partly because they knew us from our previous lives, and partly because they saw that we were doing something genuinely different, and I would argue at a speed of growth and execution that has rarely been seen before. They recognized that and they decided to back us.
And Bering Ventures, which is obviously a legendary investor, through Tinkoff, through Kaspi in Kazakhstan, and a number of other very successful investments, they weren't named in the Series A and the Series B. So basically, their role was at the very beginning, but they haven't continued to invest.
That's right, and they were the biggest believers, obviously, at the beginning of the project, and they seeded it with a very sizable amount, which we were able to agree on, given again the expertise of the team, the experience, the track record, and the very clear ideas that we wanted to deploy in Mexico. Thus far, they have, they still are very sizable investors in our business. And they have not participated in the Series A nor the Series B, but we don't rule out that they may decide to raise or participate in future rounds.
And to the extent that Oleg Tinkoff and his family are involved, and maybe they're not, is their involvement through these funds or is it direct?
So Oleg's family has invested. They've invested through Bering Ventures. Their involvement is as an investor, as you have rightly mentioned. Obviously, having someone of Oleg's caliber as a as a mentor, as a strategic guidance is hugely helpful as someone who has built very successful businesses from scratch time and time again. And so we try to use that resource as much as we can, but operationally there is no involvement. It's the founding team, and it's the more than 3,000 people that we have put together in the last 3 years that are building Plata.
Neri, moving to the business, you mentioned this 2 million clients in 3 years, which is quite astonishing, really.
As far as we can tell, we're the fastest ever digital bank to get to 2 million customers from founding.
So I think, some people would say that's scary because if anyone could sit in the middle of Insurgentes and Reforma and give out 2 million credit cards. The challenge is not giving out lots of credit cards, but giving it to the people who are going to meet their payments, obviously. So how have you been able to grow that fast and manage healthy asset quality?
I would agree with you that, if we had received 2 million applications from the credit card and we had issued 2 million credit cards, I would probably be quite worried as well. But we have received over 22 million applications for the credit card since we started. So you can look at, at us being extremely selective in who we've been actually giving out credit. The secret is exactly in that, is to make sure that the product goes viral, for lack of a better word, then a lot of people want to apply. A lot of good people want to apply for it, and they apply for it for the right reasons because they want a good product. And then it's the ability to, exactly what you're kind of hinted at, is being able to give the credit to the right customers. And the reality is that credit in this kind of size of customer base is an extremely complex business. Underwriting actually is only one part of it, because you need to build a product that appeals to the good customers. Then you need to be in the right channels to market it properly. Then you need to have the actual underwriting, and you need to be very good with data and be able to tell who the customer is going to be profitable, what level of risk, and it's all about your forecasting. Then you need to make sure that customer comes on board and stays with you, that they use it, they have the right incentives, that if they have a problem, you solve them through really good customer service, that they enjoy it, so that you have to invest in UX and UI. Then you have to manage a portfolio. Managing a portfolio means collections on one side. It means, portfolio management, limit increase on the other side. That's extremely difficult to do in Mexico. Add to that the regulated angle. You got to manage capital. You got to manage liquidity. You got to manage all the regulatory ratios, all the compliance. You add all of that together, and it's just an incredibly difficult business to do right across the board. Our advantage, if you want, is that I believe we have the best people in the business doing every one of those functions, partly because we were able to bring them over from Tinkoff, partly because we found some amazing people here in Mexico. And we've been able to group together that amazing experience and know-how with all the relevant knowledge that we need to have to build something very tropicalized. And that's what's allowed us to build something that is scaling profitably.
All of the fintech credit companies, I imagine, I haven't spoken to all of them, say that they're the best at what they do. If you look at the numbers of the companies that report, i.e., Nu and Klar, Story, in particular, they're looking at cost of risk, basically non-performing loans plus write-offs over the last 12 months. 25%, let's say, is an average. In some cases, higher than that. And that was clearly, in Nu's case, their adjusted net interest margin, right now, I believe, is negative net interest margin after write-offs. Are your numbers, and I realize at this point you're not going to go into any specific details, but are your numbers sort of materially different to the other fintech credit card companies?
Look, first here, I'm actually going to probably come in and defend some of my peers, in the sense that you have to be very careful when deriving these conclusions from accounting numbers, especially in the case of certain accounting standards that are really punitive when you are growing quickly. So, for example, under IFRS 9, you have to provide for loans the moment you issue them. And so you're taking a lot of provisions up front without recording any of the revenue, so that inevitably depresses your near-term earnings, but it doesn't mean that you're taking the wrong decision in terms of credit. It's just a timing issue. So I'm just a little little bit always mindful because I know that also, we are growing very quickly. We're also subject to the same accounting standards, and we are taking the provisions up front. That said, I think where we are different and where we can build a more profitable business is that we tend to monetize relatively well. We have a very high margin portfolio. And at the same time, we've been able to go into a lot of very different segments of the market. Yes, the very large unbanked, underbanked opportunity, but also we have product that is suitable for a more affluent customer base, which has meant that we have been able to, issue at a risk level that is somewhere in between where the banks are and where the fintechs are. So our risk metrics, as far as we can tell, again, difficult sometimes to compare Sofipos to bank, MX Gap to IFRS, etc. But as far as we can tell, we are lower on risk, higher on margin. And that's why we've been able to, we've been operationally break-even since May, meaning that our revenues have been covering all of our fixed costs since May this year. Now, we're still investing heavily in acquisition of new customers, which means that we're not yet profitable, but we should be able to be profitable sometime in the first half of next year, even including all of the acquisition expenditure.
And your clients, which I guess would adjust for growth, your clients are profitable on a per client basis.
Absolutely. We are extremely happy with our unit economics. We've been in a position, which is a very privileged one, where actually figuring out the unit economics has not been a concern for us for the last year at least. Obviously, there's constant fine tuning, there's constant improvement, and we're always looking for ways to improve them. But we've been issuing profitably, from almost 9 months since we launched in April 2023. And that's why we've been able to scale this quickly, because we have that confidence that we're issuing profitably. And it feels like we've built a very, very solid credit card engine, issuing credit cards that our customers love, but that are also bringing in the right return on capital. And it's been a question of putting the fuel in that engine and really scaling it.
Now, you obviously don't need a bank license to issue credit cards. So what are you going to do, and in what order, to the extent you're able to share that, once you get the operating part of your banking license and can get going?
Yeah, I would say that the license allows us to supercharge what we have already built. Right now we're limited by relatively expensive and restrictive wholesale funding, which is not particularly abundant in Mexico. And we are restricted from only selling directly, D2C to new consumers that are coming to us for a credit card for the first time. And obviously, we don't have any transactional data on our customers because they have their accounts and their transactions somewhere else, and their incomes go to hit other bank accounts. So the license allows us to, one, bring in a lot more customers, because debit customers, we don't have to reject the overwhelming majority of our customers. There's no credit risk there. It allows us to lower our cost of funds quite meaningfully, and therefore make more profitable credit decisions and give credit to more people, because some people that were originally not profitable can become profitable with lower funding costs. And it provides us a ton of other data that we can use to, again, really become much more precise in our decisions, whether it's to cross-sell credit or investments or anything else that we may launch later on. And of course, ultimately, we want the customer to stay with us and fix and satisfy all of their financial necessities with us. And so offering more products allows us to build stickier, longer-term relationships, allow us to grow our LTV, if we want to use some of the very popular acronyms that get thrown around all the time. And that allows us to build a more solid, loyal customer base. And of course, I think there's still an element of trust. I mean, we're in a business where trust is crucial, and being able to eventually call ourselves a bank and label ourselves as such, and being able to tell customers that we are regulated, we're tightly supervised, etc. There's huge value in that as well.
So I think Nu has built up a very, very large deposit base, actually 4 to 5 times its credit card balance. Will you follow a sort of similar strategy of building up a very large deposit base to fund your credit card and bring down those costs, which 15.5% in dollars, probably swapped into pesos? You're looking at 20+% in pesos. That's on the unsecured. Obviously, on the secured, I would imagine it's slightly lower.
So Nubank and a lot of the other fintechs have showed that there's huge demand out there for being rewarded for keeping your money in a bank. And although obviously at some point competition got a little bit too aggressive for my taste, especially at the beginning or throughout 2024. Rates have come down quite a bit. You rarely see now 15% or so being paid on all the balances, etc. But I think that's woken up and has shown a way in which it is possible to grow that deposit base. Now we're going to get to the bank license. We already have almost 2.5 million customers. We'll get to the license with a few more of those customers, and we can start offering deposits to those customers. Now, we ideally would not want to be running a position of very expensive excess liquidity. But we have to get started, and we have to see what the demand is and what the inflow is going to be, and we can always adjust our rates accordingly to make sure that we do have enough deposits to fund first the growth. And then if we have excess deposits, yes, we can refinance out some of our more expensive facilities, some of our more expensive wholesale funding, because obviously we do believe that deposits should be lower cost than wholesale funding. That said, I think there will always be space for wholesale funding in our capital structure. We're very mindful about asset liability mismatch and duration mismatch, and deposits can always leave if something happens. And so it is important to have longer term sources of funding as well. So we are going to be very diversified on the liability side as well.
And in terms of new products, you're going to presumably you're going to move into once you have the license into payroll lending. Is that going to be a focus for you? Because that's quite low risk, quite risk adjusted, quite high margin if you get it right. Looking at other banks' sources of profits here in Mexico.
Actually, payroll lending is not on our radar right now, or at least not in the very near term. Now, of course, again, with the license will come the ability to do deposits and current accounts and investments, and that will be the growth engine for the number of customers, and then for eventually, offering all sorts of other products. I don't want to get too far ahead of myself, but we have ideas for other credit products, both on the unsecured side, but possibly we could look at secured longer term as well. We do like the idea of investments. We do think that there's very few players that have been able to build out retail investments like a Robinhood has done in the US, or like a Revolut has done in Europe. We do like that opportunity. And I mean, all I would say is that you can go and have a look at the products that Tinkoff used to offer, and you can probably get inspired. We definitely get inspired from that. But it's a question of sequencing, and it's a question of also not doing too many things at the same time. Focus is key.
On credit cards, incumbent bank like Banamex, it's got a very high, I think it's the second highest market share in credit cards after BBVA, and they tend to go after fairly affluent customers by Mexican standards with lower rates than Plata or new charges, and give you quite a lot of rewards in return for being their customer or cashback and things of that nature. Banamex is going through, obviously an ownership change. It's been a big cash cow for them over, 50 years now. Would it be interesting for you to go sort of head to head with a kind of platinum Plata card, if that makes sense, with cashbacks or membership points and so on, and go after that market as well? Or are you going to stick to your current demographics?
Look, I would say that very affluent customers are more difficult to get because they have more loyalty towards brand, towards stability, and that's something that takes a very long time to build. I mean, the Banamexes, the BBVAs, the Banortes, their biggest asset is arguably their brand, their recognition. They're seen as safe havens, etc. So to get people to move out of those, especially people that might be very affluent and have a lot of money with them, it's tricky. It's not the most obvious place to start. That said, up until now, we've built the product in a relatively universal way, in ways that can be used very differently by very different segments. So we do have more affluent, more prime customers, but we also have the more unbanked and underbanked. And actually, they use the card completely differently. But the card is suitable to be used in different ways. So, we're building something universal. We don't have just one segment or one product in mind, and we will just be constantly assessing where the opportunities are. And as the brand grows, as the recognition grows, as we get seen more and more as a very solid, trustworthy company, then inevitably we will start going into segments that are not necessarily available to us now.
And I think Klara announced that it's going into the sort of SME banking sector, small and medium-sized enterprises. Is that something that you're going to be looking at in the near term?
I think that's a great decision. I am a big fan of SME banking, and I think it is a huge opportunity in Mexico. I would say right now we're a bit busy with other stuff, but it's definitely an opportunity that we are observing because I mean, not just in Mexico, generally SMEs tend to be underserved in a lot of countries, but I think the level of competition in SME is somewhat more even affordable than it is in credit cards and in retail. There's just more larger players in the retail space than there are in the SME space. So props to Klar for identifying and moving there. I completely agree with their decision.
When you were talking, Neri, about some of the sort of distinguishing factors that explain your success, you didn't mention your ambassador model, which you've talked about in newspaper interviews, which really makes you, from the way I see it, quite different to a new that has no physical contact with the end customer, whereas you do, because you send an ambassador to interview the prospect and then to give him the card. I've had that interview at my home. Do you think that and that was obviously came from Tinkoff, which had that ambassador approach? Do you think in a country like Mexico, having some kind of physical relationship, even if it's very brief, when you hand over the card or interview the person, helps bring down the fraud rates?
It definitely does. Again, I would actually say that digital onboarding, so meaning non-ambassador onboarding, if done properly, can also have very low fraud rates, especially because in Mexico you have actually something quite neat where you can connect to the electoral database and you can actually go and check whether the picture that the customer is showing you in their ID is the actual one that is in the electoral database. So you can actually make a live match and check whether the ID is fake or not almost immediately. So I would say that actually from that perspective, Mexico is very advanced and you can do digital onboarding very with very low fraud rates. That said, inevitably having a physical meeting is just going to add an extra degree of safety to that because a fraudster is going to think twice before going and meet someone in person. It's a lot more easy to try and apply for something and apply 10 different times and get rejected than it is to try and meet someone and try to defraud an actual human being. So fraud is one of the many reasons why we have introduced the ambassador network. And it's now grown to be very sizable. It's over 900 ambassadors in 85 cities in Mexico. They're doing over 10,000 meetings a day almost. And something that we consider to be one of our key advantages on the underwriting side and on this customer service side. It's also something that is very, very difficult to do because, as you can imagine, it's basically a logistics business inside the bank. And that requires a lot of heavy lifting from the hiring, the training, the monitoring, the development, the routing, et cetera, et cetera. So it is something that took us a while to figure out. And there's still a lot that we need to figure out, but we do see it as definitely a differentiator, and actually customers appreciate it. There's definitely segments of the population where having someone come over and explain how things work, where to pay, how to download the app, how to use it, it definitely helps.
Yeah, I think so. I mean, in my case, at least, I think you're more likely to use the card if someone puts it into your hand because it's kind of easy on an app late at night to order a credit card, but then you just sort of sometimes forget about it. Whereas if someone comes and explains it to you, you sort of feel, well, I'll use this card then. Because I think there's a lot of credit cards. I mean, New, I think has, well, they say they have 13 million customers, but let's say they have 6 to 7 in credit cards. I think a lot of those cards for them and others are not being actively used as far as I understand.
Frankly, we don't have the data. Again, I think that digital onboarding done well in Mexico, and I'm confident that a lot of our peers are doing it, can still lead to a very high activation rate. But we're happy with our model as well.
And so, if there's 900 ambassadors, and you said you were about 3,000 people, so nearly 30% of your payroll are in ambassadors. Is that a correct statement? And then of the other 2,100, how many of those are in Mexico City and how many are kind of offshore? Because quite a lot of the fintechs, including New, of course, have sizable kind of offshore employees. And does the CMBV care about that, having people outside Mexico?
So we have we split it between HQ and operations. Operations being the ambassadors, customer service, collections, fraud prevention, all the very operational part. That is already over 2,000 people, and they're all in Mexico. Now, obviously, the ambassadors are not all in Mexico City. They're all over the place, but everyone else is in Mexico City. And then in HQ, we have about 900 people. And half of them are in Mexico and half of them are in our European offices. So we have offices in Spain, in Cyprus, in Serbia, in Kazakhstan, and that's mostly our IT development. There is certain regulation you've got to fulfill, and you've got to make sure that that there are certain rules that are followed. But as you mentioned, it's a very common occurrence for Mexican banks to have development outside. And it's not just the fintechs. I mean, the BBVAs, the Santanders, everyone, does a lot of their development in a centralized way somewhere else.
Understood. Just a couple more questions, Neri. Colombia, you announced that you're moving into Colombia. Is the idea to just replicate the Mexico playbook in Colombia, or is it going to be a different strategy?
It's going to be initially different in that we're going to be licensed first. So if in Mexico we built a credit business and in parallel we got a license and they're kind of converging now, in Colombia we went and got a license first. And so we will start with a license right away, which should allows us to do debit and then launch all of the other products that we know how to launch. Colombia is definitely a very different market, rate caps, but also, a new fast payment system that's completely interoperable. So it's going to be very different competitive dynamics, but we are going to try and bring, again, the things that really differentiate us, which is product, user experience, and customer service.
But the plan is to be, proportionate to the size of the population. So if Colombia is a bit less than half the size of Mexico, if you're at 2.5 million clients in Mexico, maybe in 3 years' time, you'll have 1 million clients in Colombia.
Hopefully more. We'll see. Obviously, again, the fact that we can start with debit and deposit right away should help the growth in customer numbers to be maybe more than we have had the chance to do in Mexico. Because again, in Mexico, we've had to start with credit, and credit, you've got to, as we've discussed extensively today, you've got to be careful who you give money to. So hopefully Colombia being licensed first and debit first can actually be more exciting in terms of customer growth.
And any other countries on your radar screen in Latin America or anywhere else for that matter?
Not currently, or at least nothing actually in the works. We're going to use Colombia as a place to build a framework to really understand how to go international. I think that's arguably been one of the most difficult questions in banking history. It's very difficult to build something across different jurisdictions because banking is extremely local. And you had examples of companies that are extremely centralized and try to do the same thing in many countries. And then you had examples of companies that do very, very specific businesses for a specific country, but then end up duplicating a lot of the investment and a lot of the overheads, et cetera. So finding the right balance is going to be fun over the next couple of years. We'll use Colombia as a test case. If that works, there's no reason why we cannot think about other places. But as I also mentioned earlier, focus is key. Having all of our resources focused on the most important thing at the time and executing is definitely something that we cannot give up. And I mean, the prize in Mexico is so big right now that we cannot afford to get overly distracted with other things.
And how many people do you have in Colombia at the moment?
We're just starting to put the team together now.
Okay. So last question, Neri. This has been fascinating. Thank you. What's the exit? Presumably, at some point, and there's private equity money in the entity. Usually they want to get out up to 7 or 8 years. Is it an IPO? Is it selling to a strategic, or is it too early to be thinking about what the end game is?
Look, we're obviously very pragmatic and very open-minded about this kind of stuff, but I would be lying if all of us are not dreaming about a US listing at some point where we can take the company public and be recognized as one of the leading public LATAM fintechs. So I think we're maybe not too far off, but there's still a lot of stuff that we need to do before that. But yeah, that's definitely something that we look forward to and want to prepare for.
I mean, you say you're not too far off. I mean, based on your latest valuation at 3.1 billion, you're more valuable, or roughly the same value as Gentera, Bajío, and Banregio. So you're right up there in terms of market size with already listed Mexican banks.
That's right.
Great. Well, Neri, thank you so much for your time. Many congratulations on the raise and for all that you've achieved.
Thanks for having me. It still feels like we're at the beginning of the journey, and as I said, every day that we are here in Mexico, we realize that the opportunity is huge, and we made the right decision coming here. To the point that now I got my Mexican citizenship and I'm a Mexican national.
So thank you very much for joining Mex Moves, our weekly podcast on Mexico business and finance for the global audience. Hope you rate us and listen in next week.
Thanks everyone for listening. We'll hope you'll catch up with us again next week.